Hello everyone and welcome back to another video. It's amazing what's happening now in the world of online. We obviously have fake news being released and distributed everywhere, and that moves markets amazingly fast. Walmart, of course, did not actually take Litecoin yesterday, but it created a massive pump and dump in the crypto markets. We also saw some massive shenanigans happening from Wall Street on the S&P 500, Nasdaq, and more. There's a lot to cover. Stay tuned, guys. Okay guys, well here begins our market recap for the markets closed 13th of September 2021. And when we take a look at this heat map, you will notice that it's up, down, and all around. Really, energy was the standout over the last session. Another thing that I think is really important when we take a look at these indices is to notice that the whole day, the Dow Jones was relatively strong in comparison to the S&P 500 and Nasdaq. Now, you might say that's because of oil and energy, but I also think it's that standard flight from growth. So generally during a pullback or when the market is hunkering down or like getting ready for something bigger, they tend to move into larger companies, big cap, safety areas, and that seemed to be most of the rotation that was occurring over the last 24 hours. We also saw energy 2.87% up, which was a strong day for that sector, and healthcare, XLV, IBB being the weakest in terms of the sectors overall. Fear indices are still sitting around that fear kind of medium neutrally kind of area, not extreme fear. So there is still a lot of buy the dip going on. People are still very optimistic about the markets. And in realism, yes, you should always be optimistic about the markets, but that doesn't change the fact that there are some technical analysis levels that I think you guys will enjoy in today's video. Let's now move over to the VIX, so the fear index itself. When we're taking a look at the fear index, you'll notice that it's in this range. 20 is of course always the big trigger, and when it gets above 20, let's say it holds a 25 plus, that's actually very, very rare. 25 plus does not happen very often in terms of closures. Usually that can only happen if it gets through a key support, and I would expect if 25 plus was to occur, we would be below the 50 exponential moving average on the SPY on the S&P 500. We'll talk about that more soon. Let's move also into another thing that's happening this Friday. If anyone's not aware by now, quadruple witching event. This is when all of the options expire, and it does tend to lead into a very interesting week. So basically we have a lot more volatility. We have a lot of options expiring. All four major options markets are expiring at the same point, and there can be a lot of manipulation switches that also occur. Let's look at the S&P 500 to get started, because I think this is the market that most people are looking at. Here's the bottom trend line that a lot of people have drawn. This goes back through to the kind of recovery period through the pandemic. And you'll notice that we put pressure on it yesterday, but didn't close underneath. We're still underneath the daily 20 exponential moving average, but we are not underneath this zone. Let's think about this. So we've got, of course, the 440, the 430, and then the 420 kind of zones that they're interesting to a lot of people. If we go over to the options, and this is just Yahoo Options, I think the most interesting thing for a lot of traders and investors is going to be where are all the option strikes coming in and how many people are actually adding puts into the market. So I don't think the open interest has increased as much as I would expect it to, which is maybe a good thing if you're a bear in the markets. Usually if a huge amount of people add puts, that tends to lead to more of a base being formed. But we do have some big levels. 430, of course, 90,000 puts sitting there in terms of open interest. 440, probably the big point for this week, 84,000. I would expect that to get more stacked as the days go on. And then we have the standard 450 right around price, 55,000. So look, there are some big levels. Every $10 on the SPY is a big thing when it comes to options. And as we know, these are what we call put floors. So generally options expire worthless. If they're only for the end of the week, then if the market's going to come down and you see, let's say 300,000 puts sitting on 430, do you think that it's likely it will get underneath 430 this week? You can answer it yourselves, guys. You guys got big brains. You would know, yes, it is unlikely that it would get through that level. Of course, that would be not opportune for Wall Street to close underneath there, because they like to expire around 70% of options expire worthless. and it's not in their best interest to pay out on them. Even if some of those are them themselves, most of them would be retail and smaller investors. We'll move over to gold here. A lot of people are starting to talk about gold again, and I think it's because it keeps rejecting a certain zone and it's very tightly range bound. You'll notice on the daily here, we have that 1802 kind of resistance, and we have that 1782 support or 1783 support. We close out below or above either of these sides, we get what we call a participation phase. I think a closure up here would really be squeezing a lot of stops. I mean, think about it. You've got rejection, 1, 2, 3, 4 rejections, moving averages everywhere. If you were able to close above this point, 1820 seems like the logical choice, and then 1830 also is a very logical choice. That will be the range of this. If we close underneath this zone, I think 1760 is the next logical choice. You can see over here on the left-hand side, previous supports, and this should be where the buyers and the sellers come in. Gold in a zone, very trapped. If you're trading within the zone, just go down to the 1 hour and start to take a look at it. Let's get into the stocks, and we'll talk about Tesla to get started with. I tell you what, wow, look at this. The retail herd got into this one and they bought it up. Pretty happy with that looking candle. If it has follow through action, that is a giant pin bar rejection, usually a very bullish signal. Now, when it happens off a key level, it's usually even better. And we did have those resistance equals support and the 20 moving average. It got a little bit lower, but it fully rejected. Now what you're looking for is follow through. So you want a percentage of this candle to be followed through, and when that happens, you generally then break a new high. So this is looking positive for Tesla. We do not want it underneath this support down here at all. That is the 708, but what an interesting point there into the close. Let's take a look at the options flow. What's happening in the options flow? Again, if you want this type of options flow, you can jump into our private community, 7-day free trial in the links down below, and you can request this for your favorite stocks and obviously get some information, including options flow, algo flow, and a whole bunch of other tools, along with our daily commentary on the markets. But let's have a think about these levels. So this is the net options calls versus puts opened for this week and the weeks ahead. Lots of bearishness we've seen around that 700, 720 market. And I think that kind of puts in a bit of a flaw here in the coming months. Again, if Tesla is going to go bullish, this is the time for it to do so. It's got that nice 2 steps forward, 1 step back, 2 steps forward, 1 step back style market. We've seen positive signs in the price action recently, and we have also seen a little bit of manipulation on keeping it under key strikes of options. So we've got the 740 emerging as the point to watch this week. We don't seem to have too much positivity on the 760 strike, which is fine. And if we break above all these resistances, such as we go back here and we get back above 765, I wouldn't be surprised at all if we don't stop. I mean, 780 is the clear target, but I wouldn't be surprised at all if we keep going past that point, and that is the trigger for, you know, a bigger, larger move. This is the only worrying thing. The algo flow was negative coming into the close. So what that means is there was a bit of dumping in terms of flow here on Tesla right near that close. So while the price continued up, it wasn't like the options flow from Wall Street was looking positive. It was looking a lot more negative in terms of the algorithm here. And that's not something we've seen be negative, very positive the next session. So it'll be interesting to see how Tesla ends up opening. AMC, let's take a look at this. Very nice long leg doji. We hit our first take profit here. Congratulations. I'll give you guys a bit of a clap. Fantastic work there on the AMC position. I really think that was a great little level. Now that we've created a long leg doji, I guess it gets even better, because we know with long leg doji, it means indecision. We close above a long leg doji. What happens? Decision made. Where's the next target? $60 from a technical standpoint. I'm pretty happy with that. We've been pretty bullish on the channel recently on AMC, and the main reason is the price action has been exceptional, and we love good price action, and I don't care what the stock is really, as long as it's fairly large and it has a lot of trading volume in it, then it's good. If we get underneath the long leg doji and we close below that, then we start putting pressure back on the 48. If we get through 48, of course, you can see the levels here that we've got highlighted. Very important zones to be watching. Another positive thing was the algo flow was with the traders. So what that means is overall, everything was looking pretty positive for the end of the close from AMC, and we just need to get to that break new high. Let's take a look at Apple before the indices. Apple's interesting. Well, it did break through. We kind of knew last week. People in the community were very well aware this trend line broke below. That created a short. My expectation was 150, I think, in terms of the take profit from the short. You've got to be really quick. Remember, if you're a bear in the market, bear markets don't generally happen. The market is built around being bullish, and at the same time, most pullbacks are short-lived. So especially in a hyper-aggressive market, you've got to be in, you've got to be out, you've got to think of that day trader scalping mentality. You can't just think, oh, I'm going to swing trade this down. I mean, sometimes you'll be right, but most of the time, it'll just be a very small correction. So let's have a look at this Apple chart. What have we got happening? Well, we have a clear level that's got to be watched here for traders and investors, because 148.60, look at this. So much buying. It's also in the recent price action, the highest volume profile over here on the right-hand side. And if we close underneath this, I think that's a warning sign for things like the indices. Of course, the Nasdaq, the S&P 500. Apple makes up such a huge part of that, that if it closes underneath here, that's why we're watching it, then we get further shorting pressure, possibly even down to the 145 or 141.51 previous lows. And this would be significant. Now, if you're looking at where does Apple look a lot better, of course, a break above this line, 150.80, we close above there, and all of a sudden we're putting in a base here on the 1 hour time frame, 15-minute time frame for the long. So we've got some great decisions, got some great levels coming through with Apple. And if we look at the algo flow, again, algo flow very strong into the close, showing us that there is this flight to safety that Wall Street's doing. Remember, currently Wall Street might be sitting in growth stocks, and if they're going to hunker down, one of the warning signs is that they go and they buy what they consider defensive, which is like Cathie Woods. What does Cathie Woods decide is defensive? She buys the big tech stocks. That is kind of what Wall Street does as well. They rotate into things because they've always got to be invested. So if they believe a market's going to come down, what will they do? Well, they'll go buy Apple. They might lose 15, 20% in the Apple stock, but they may lose 30, 40% in a hyper stock. So remember, it's all about beating the market. That's all they care about. As long as they beat the index, they're happy. They've got to be invested all the time. And that's one of the things that a lot of people, I think, underestimate a little bit in the markets. Let's have a look at the technical analysis here. Let's talk about the SPX. So it closed below the 20. And let's look at the funny business that happened through the session. So this is not including futures, but the market basically closed below, gapped up, moved towards that 44.90, which we knew was going to be a tough point for it. Previous support, 20 moving average, getting tested from the bottom up. It then sold off, sold hard, and then recovered near the end of the day. At the time of this recording, we're sitting back at 44.82. So we're basically putting constant upward pressure on this zone, and this becomes the most important area that we want to close. 44.90, a really important level where that 20 moving average is. If we actually move over to something like the Nasdaq, which we'll do in a second, you'll see it again. Very sneaky stuff coming in from Wall Street. Another thing I like about this chart is that we've created a long leg doji. So when we look at a long leg doji, again, indecision, we close above the long leg doji, we're back in the uptrend, and it looks like we're going towards the high, if not making new highs. We close below long leg doji, well, we hit the 50 exponential moving average, and the bears really come out to play. Will they fight this underneath? We've talked about the 50 so many times, and there's good reason why we talk about this zone. Everyone knows about the 50 by now, guys. The 50 is 1, 2, 3, 4, 5. Remember, futures did hit this level. There's even more down here that it's touched. If it closes under that, that's when the bears, and you're talking about that September correction of potentially 8 to 10% that we've discussed here a few times. This is super important for us to look at. The other thing that we're going to be looking at is, of course, the US 100. We're taking a look here at the chart, and we see the exact same sneaky business yesterday. It rolled up, it hit this level, previous supports, sold off aggressively, actually made a new low, which is pretty important. And at the time of this recording, we're sitting right around that resistance. More new lows, further sell-off. Where does the expectation become? Just like the S&P 500, the 50 exponential moving average is the key zone. and we move over here, look at that. No surprises. Long-legged doji. Indecision right at the zone you expect the buyers and the sellers to be fighting it out before either moving back down to the 50 or going back up and testing the highs. It's funny how they do this in a week with some news and also a week with quad witching hour. Speaking of news, CPI coming out before the market open. That probably will be the catalyst that moves the market either way. Dow also finding support here at the 34 kind of 650 area. All right, guys. Well, it's time to talk about the elephant in the room. And of course, that's going to be the cryptocurrencies around the world, specifically Bitcoin and Litecoin. We had this mega candle over here. This is a lot of money. We need to remember this Bitcoin moving is a substantial amount of cash. I think the chart that exemplifies this, though, is Litecoin. And I just want to bring up Litecoin for everyone that hasn't seen it yet. Let's go in here. Let's bring up Litecoin and think about what just happened. So, of course, fake news coming out that Walmart had accepted Litecoin as a payment method. It goes straight into resistance. Again, why maybe having technical take profits might be okay. And then fully reverses that as it found that this was a great elaborate pump dump kind of scheme. This is the problem with, I guess, the market and how fast things are moving nowadays. We do see this happen a few times. We've had it happen in many different stocks over the last 12 to 18 months. There's a lot of money to be made here. We'll end up finding out what is going on, but I don't think it's necessarily an indictment on crypto. I think it's an indictment on algorithmic news. So what I mean by that is articles being written, dissemination of information so quickly. Even during our live stream, we got this information coming in and I was like, what is going on? Like that doesn't, it almost didn't make sense to me because I'm thinking, why would they accept Litecoin and not accept Bitcoin or something? Like it didn't make sense. And sometimes when something doesn't make sense, it's because it's not actually real. Let's talk about the major levels. We still have that 47.5 level for the full recovery of Bitcoin after this initial drop. It's starting to look kind of like a Wyckoff accumulation. You can bring it over. You'll even see this was technically another stop hunt yesterday because remember, it came back down, stop hunted people out. Litecoin didn't go back down that hard, but Bitcoin certainly did. So if it is a Wyckoff accumulation, continue to expect it to kind of come up here, either consolidate here, then break through, or break through, consolidate, and move forward. And we know both of those things are very, very strong. If you're looking at the negative side, you need this thing underneath 42.5. And unless that happens, nothing really to discuss. BTC shorts, meanwhile, remain relatively low. Again, that's positive to the market and the overall health. It means the whales are not thinking about shorting it. And I just want to remind everybody, I always put this slide at the back. If you're thinking, let's say the market does correct 8 to 10%, and that just happens. If you think that's a really big worry, remember the statistics are in your favor towards long side stuff, usually in the markets. In this case, we've had 7 months in a row positive. Remember, in 6 months' time, 93% of those markets basically were positive and not just small positive, big. So is buy the dip generally one of the better philosophies? Sure, but you've got to obviously buy quality. Another thing you'll be wanting to look for is Tuesday. We've got CPI coming out of the US. We'll continue to watch this and we'll be doing a live stream 1 hour before the New York Open. So remember, come and subscribe. Click that like button if you enjoy it and come and join us for the live streams. It's a lot of fun and we'll see you either at the live or the next video. Bye for now, guys.